I sort of remember going into the year, and maybe your memory is different, that everyone was pricing in like 6 or 7 rate cuts. In that January meeting, the Fed's like, hold your horses, inflation's still a little high. And we saw bond yields go up, bond prices go down. I don't know, for me, when I think about a lot of that period of time, as well as even now, to me, it still feels like people are really anchored to that zero interest rate period. And I just don't see interest rates settling back where people are anchored. How are you making sense of what the Fed is doing today and what your memory was of back then?
So going into 2022, it was consensus that the Fed was going to manufacture a recession. And despite their best efforts, they weren't able to do it because we were flush with cash. And in that scenario, we're not going to not spend. And so they jacked up interest rates in hopes of slowing down the economy, cooling inflation. Everybody was bearish. And the financial markets had a really tough year. Of course, bond prices got destroyed, not giving ballast to a 60-40 portfolio, but dragging it down, right? As interest rates went up, fears abound, and tech stocks got crushed. And 2022 was a really tough year. I think people forget. They act as if it's been up only, and this has been a really easy one-way bull market, and that just could not be farther from the truth. And then heading into 2023, so we had the low in October 2022, and I remember, and I've said the story, but it bears repeating. I was in a room full of investors, and I said, "Hand up if you think that was the bottom." Nobody raised their hand. Hand up if you think there's going to be a recession next year. Every hand in the room went up. And so everybody was positioned for 2023 to be a really rough year. And lo and behold, tech stocks bottomed on December 30th or December 31st. And it was up only. And a lot of that is because the narrative changed. Why? Because the facts changed. We had ChatGPT and this whole wave of enthusiasm of something that was completely unforeseen and unpredictable and probably did save us from a recession or a longer bear market. And so in 2023, you had all those things. And as we looked forward to 2024, we said, okay, now, mission accomplished. We landed the plane, and I say we, I mean the consumers. I don't think the Fed. I think we didn't crash despite their best efforts to do so, and we were up like 20-something% in 2023. And who had on their bingo card that we were going to be up 29% in 2024? Not me, and not many other people either. You look at like the average Wall Street strategist had a negative price target for the year, which is unheard of. I think that's literally never happened before. And so when everybody was on one side of the ship, it steered a different direction. So to your point about like interest rates and anchoring to ZIRP, I don't really get that sense. I think that a lot of misallocation and damage was done in that era. I think we're seeing some of the side effects from that still to today. But the interest rate trajectory is interesting, probably more so from the view of like the housing market more than the stock market at this point.
Yeah, if you don't own a home, you're upset. If you do, maybe you don't really care unless you want to move. But I mean, in general, I feel like the Fed has, in interest rates in general, have probably gotten more attention from the average investor, or I should maybe even say average consumer, than normal. I mean, if I'm looking at what the Fed did in 2020 to present, where we had a crisis unlike any of us have really lived through, a crisis of health, not just, financial markets, shut down the whole economy, all the things, to inflation. I came out of school probably a similar time as you, and there wasn't inflation. 3% inflation is super normal, but people are like, any inflation are freaking the heck out. So, I mean, in your perspective, if you were going to like grade the Fed on how they've done since the pandemic through the present, what kind of grade are you giving them?
Yeah, so I think that the Fed has a very difficult job, very important job, but I don't think they did a great job. I don't think that history will be too kind to them. In my estimation, they were very late to raise rates to identify that the inflation was more than transitory, and at a time where we had the Inflation Reduction Act. Oh my God, LOL.
Right.
And all that fiscal stimulus. And then the mortgage bond buying on top of all of it, when housing prices were going up 20% every week, it seemed, and this is not revisionist history, Josh and I were young about this at the time, what are they doing? Like, do they know something that we're not seeing? Like, it seems very apparent that they should not be doing what they're doing. And then after that, they were way too late to cut rates. And so I think that they tried to crash the economy and they couldn't. And then they kept us above what I think was an appropriate level for too long. Now, listen, it's easy to be an armchair quarterback, right? So like, I don't want to like be too hard on them, but no, I don't think they did a great job.
Yeah, I'm with you. And the history books, I mean, I don't know, if a history book says they were 6 months late and you're looking at like a 20-year period, is that late or is that like good enough? I'm not enough of a Fed student to know.
I
Truly.
mean, well, also they will get credit for the AI that had nothing to do with them. Like, I think that honestly saved the market. And so had we had a hard landing, I think, but we'll never know like the alternate paths.